spread will definitely narrow in. You know, it's only a $25 spread right now, but I think, you know, to give new crop a range, you know, could you see levels of 375 to 380 CFR? You know, if you're up 35, 40% in acreage in Canada, you could definitely see those levels. Like I mentioned, though, I'm more supportive on the upside because we need to encourage the acreage, and I think we need to be at that $400 level to do that. So I would say somewhere in that 385 to 400 level on the low side, and the upward side, again, you know, outside markets, and there's so much outside influence that could affect the price. But, you know, do you give it $75, maybe a $100 upside on the high end?
Right. Thanks, Chad. So that was Chad, who's put the base price for old crop around 420.25 relative to, of course, if the freight goes down, prices could drop further. And new crop, the range that Viterra has set is between 385 and $400. Brett, your turn now.
Yeah, look, I tend to agree.
Sorry, one second, we have a question.
You said that for the new crop, $375 to $380, given the size of the crop, 2.7 million tons in Canada and 2 million tons out of Russia, don't you think this figure looks too optimistic? Or you are at the peak of the price?
Well, my personal opinion is you need to get the acreage in first. So in order to get the acreage in first, I think you need to set a minimum price, and you know, around that 375 to 380 on the low side, in my opinion, is where we set that. We've, you know, again, it's early, but we've tested that on the Canadian side of things, and producers just aren't willing to sell anything less. You know, rather than, if we're going to stay at that price, rather than plant peas, they're going to go plant canola. They're going to go plant more wheat because there's better alternatives from a margin return to them. You know, with your comment on Russia, sure, if we're going to see 2 million tons out of Russia, and I'm not sure exactly what percentage of that is exportable, but it's a big number. And you know, from that standpoint, if they're a major player, which it seems that they will be, it's going to be direct competition for, you know, to Canadian seeds. So yeah, again, it's just my range, but I think it all starts on you need to get the acres in the ground in order to get that production. They're all estimates today, and with other returns out there, you need to start somewhere.
My question to Hakan. Out of 2 million tons exportable production out of Russia, what is your opinion that what would be the exportable surplus? Because that makes very important. That is very important because I think this year there was a regular supply from Russia which has contained the price of yellow peas in India also, and I think that also contained the price of yellow peas in Canada. Because otherwise, if this kind of crop would not have been there, I think the price would have might have touched $500 because there was only supply from Canada and that was also installed. So what is your opinion, given the supply of 2 million tons out of Russia and 2.7 million tons from Canada, and if we have a very good crop of chickpeas, then what do you think that what should be the fair reasonable price for Indian market?
Well, from Russian side this year, as I mentioned, the currency was the main factor to see lower numbers here. Okay, there was a devaluation, obviously, which supported the export prices, and the feed market was very low. You know, Russian peas normally goes to the protein market in Europe, and that market was not supporting. So the numbers in India, these 400-ish numbers, were excellent return for the Russian farmers, and they had a good year. So we saw a lot of quantity moving this side. Now, if with the expectation of a large crop, and you obviously expect a bearish tone on the new crop, but if the prices will go down to a certain level, you may see nothing is getting exported out of Russia.
Thank you.
Any questions, friends from the audience? Yeah, Jairaj, can we have the mic handed to Mr. Jairaj?
This is Jairaj Patel from Hakan Agro in Dubai. I remember, you know, when we had a similar panel discussion in Barcelona, I had raised a point that the prices of the other pulses, mainly tuor or black mape or moong, they were at the time coming down, and we have seen the prices from $1,200 coming down to $600. And I had asked why at the time panel was bullish on peas. The reply given to me was that there has been an increased use of peas now in India. There's a lot of institutional use as well. But what I'm not able to understand, and what I don't know if people here in India have tried to analyze, that this year there was supposed to be a reduction in the production of chickpeas, which was estimated to about 5 million tons. But you had a good peas coming in, you still sit with stocks of 500,000 tons. Why is there still a difference of $300 between the prices of chickpeas and yellow peas? Has somebody tried to analyze that?
This is, you're talking about India, specific.
Specific to India, yes. I mean, everybody here right now is wondering what's going to happen to 500,000 tons of peas and what the prices would be in the coming time.
Would you want to comment on that, Varinder? Why is there such a big spread between the price of chickpeas and the price of yellow peas?
Well, I have been wondering as well, like Jairaj.
Or do you have a poetry on this one too?
No, but the issue is, I mean, maybe the realistic numbers of chana had been wavering all these months. I mean, they have been talking about the crop going slightly, they said that there are shades on the grains, which will not fetch them the prices, and then suddenly they say, no, the crop is fine. So maybe that chana had been toiling primarily onto the speculators' wish. So that is why it has gone to this level. Given the other pulses, I mean, behaving reasonably well, chana really went up. So maybe that has really jacked up, and moreover, peas somehow has become now more or less an inert commodity. It has lost the correlation with most of the things, I would say, in the recent past. Even the Canadian supply and demand scenario does not have an impact on India. The local demand and supply does not have an impact in India now. It has become a fairly inert produce, I would say, which does not get affected. We have seen that chana going up to 300, 400 rupees in recent past, and peas are moved only 20 rupees or 30 rupees or 40 rupees. On the other hand, when the chana falls by 100 rupees, we immediately see a fall of 100 rupees in yellow peas, which invariably happens. So that probably has created a kind of chaos in this market. Otherwise, I don't see any valid reason for this to happen. I mean, normally the gap used to be about 5 to 7 rupees, which has now gone up to 15 rupees, which is unwanted and undesired, I would say.
Thank you, Varinder. So I hope it answers your question. I would like to add that the pipeline for chana was driven dry. You must be aware that there are stock restrictions for chana in Maharashtra. I think there are stock restrictions in Rajasthan. There are stock restrictions in Delhi. These obviously distort markets. Any kind of government stock restrictions distort markets. Bull markets come from supply side. They do not come from increase of demand. The supply was driven dry because of these stock restrictions by the government of India. We have a very dry pipeline right now. We are going into a new crop, but at the same time, we have a huge stock of yellow peas, so the relationship got distorted. And I think slowly we will see that the spread starts decreasing as we go ahead and we come into the new crop chana harvest. I think we need to break for lunch. So just my concluding remarks are, as far as the price range for yellow peas is concerned, old crop is between 400 and 425, and new crop is clearly between 375 to 385. At least that is Chad's wish price, if I may say. But thank you, all of you, for joining in and sharing your views. In particular, Varinder, for that poetical analysis of the trading situation in India as of today. Thank you. Thanks a lot, and thank you, ladies and gentlemen.
Thank you, Mr. Dongre. That was the President, India Pulses and Grains Association, efficiently chairing this panel discussion. May I request the panelists to please stay with us for just about 30 seconds. We'd like to make it special by requesting the President to please present mementos on your being here on this occasion. Starting off with the gentleman to your extreme now, right, sir? That would be Mies van Dongen. Quick photo opportunity. Thank you, Ms. Van Doggen, for being with us. And we do hope that you are with us for the rest of the day and tomorrow. To Hakan Bahechi, Hakan Agro Commodities. To Shad Popovich, Viterra Asia Private Limited. Brett Dodson of the Australian Grain Export. Ladies and gentlemen, do wait for a minute, and I have a couple of important announcements to make. And Mr. Varinder Singh of MSungs. May I request Mrs. Ganga Murthy, Principal Advisor, Government of India, to please step up on stage for a moment, ma'am, and present a memento to our President, Mr. Praveen Dongre. If you could do us the honors, ma'am. Ladies and gentlemen, we're deeply indebted to Mrs. Ganga Murthy for being with us here. She has an extremely busy schedule, but she has graciously consented to be with us for the 3 days. And at the end of it, present her views, which we are much looking forward to. Thank you, ma'am. Thank you, gentlemen. Ladies and gentlemen, if you look at your watches, you'll realize that according to the schedule, we have already started the second session, chaired by Vice President